I put in about $2,300 of my own money up until it started to tick up in price. I've made a 5% return on this investment so far, which isn't really anything to brag about. But let me let you guys in on something. Yo, what's good to all my young investors? And of course, welcome back to another video. Today, I wanted to get into the 2 best stock investments I've made so far in the market. I'm going to explain why I decided to invest into these 2 specific companies, my thought process as to why I kept investing in them even when their prices kept falling, and at the end, I'm going to hit you guys with the key takeaways from today's video. These are 2 solid plays that I'm really excited to share with you guys. Don't forget to hit that like button for the YouTube algorithm. And with that being said, let's get right to it. Alright you guys, so this first play came as a really welcome surprise. This company had been on my radar for such a long time. The only problem was, it has just about always been expensive. Even when this whole COVID thing was at its peak and stocks were going down left and right, this company stayed just about the same. It didn't even go down as much as I thought it would, which of course meant I couldn't buy it at a really good price. Now a lot of you guys actually probably know this company. They always got free samples on deck and their prices are always cheap. This company of course being Costco. So back at about late November-ish, Costco hit their all-time highs in terms of stock price. It cost close to $400 to buy 1 share of Costco. This was the most expensive it's ever been. Naturally, I stayed away, since we actually take on the most risk when we buy into something as it reaches its peak. What goes up eventually comes down, and with stocks, it's no different. What actually happened was Costco started to go downwards in price almost immediately, and it actually kept going down for about 2 months. This is where patience starts to play such a major role. The stock price went from $391 to $311. As soon as I realized that Costco stock was taking a hit, I went straight into research mode. I looked at recent news to see if there was anything bad that might have happened with the company. I looked at their numbers to see if maybe something had gone wrong. But at the end of the day, everything actually checked out just fine. There was no real bad news that I could actually find, and they had just issued a special $10 dividend for investors. What I realized was this stock was just being oversold. This was an opportunity. I sprung right into action and did something called dollar cost averaging. I kept buying as the price of the company kept going lower and lower. I went from having half a share of Costco to owning 7 shares. I put in about $2,300 of my own money up until it started to tick up in price. I've made a 5% return on this investment so far, which isn't really anything to brag about. But let me let you guys in on something. The majority of the profits come in the back end. Not right now, not in the short term. I'm focusing on the long-term play. I know this investment is gonna pay off. Costco is a great company that has been growing their profit margins. They've got great management and they're recession-proof, to name a few. Think about it this way, you guys. During bad times, we go to Costco because their prices are low. And during good times, we go to Costco because the prices are low. Even better, this company has got revolving streams of income through their memberships. In 2020, Costco had over 100 million active memberships worldwide. That's over $3 billion in revenue from memberships alone. With that being said, let's move on to the second investment. And I'll definitely keep you guys posted on this Costco play. Alright, so this second investment actually came in the middle of COVID. Unlike Costco, this company actually got hit pretty hard. Their stock price went from 137 to about 80 bucks. There was so much going on with COVID that everybody just sort of freaked out and turned to selling their stocks as a result. It didn't even matter if it was a good company or not. Just about everybody was selling. Now keep in mind that this stock was already in my portfolio. It was just a little too expensive before the sell-off happened. The company I'm talking about is JP Morgan Chase. JP Morgan is the biggest bank in the United States in terms of assets that it controls. Just over $3 trillion worth. JP Morgan is among the top 10 most profitable companies in the entire world. These guys are up there with Apple. They're no joke. So once JP Morgan shot down in price, I did the exact same thing I did with Costco. I went straight into research mode and made sure that this was still a solid play. And sure enough, it was. Jamie Dimon, their CEO, runs the company in a great way. He thinks ahead, he invests in the future, and the company has tripled its earnings and grown its assets about 110% since he took over. This is from a Fortune article back in 2017. The company has grown even more across the board since then. JP Morgan was solid, but the stock price didn't reflect that. So I took advantage and dollar cost averaged once again. I went from having 1 share to about 10. I bought from March to about November. My total ROI on JP Morgan has been about 40%. And like Costco, this investment is only going to keep growing. All I have to do is be patient and let my money work for me. Like the rest of my holdings, JP Morgan and Costco are gonna shine brighter and brighter the longer that I hold on to them. So with all of that being said, let's look into the key takeaways from today's video. Alright, so key takeaway number 1, patience. Don't buy because we just keep seeing a stock going up. This is called FOMO, or fear of missing out. The riskiest point to buy stocks is when their price is at their highest, since the chances of them going down once again are pretty high. You guys see this with the Costco example. Once they reached their all-time highs, they started going lower and lower. I guarantee you that somebody somewhere bought at their all-time highs and sold when they were going low. Instead, be patient and wait your turn. In the market, patience is always rewarded. Number 2, research. I can't stress this one enough. I looked into balance sheets, I read articles, and I looked at how companies were handling trouble. Doing this took any fear that I had away. Warren Buffett is said to be greedy when others are fearful, and be fearful when others are greedy. This is absolutely true. In order to keep calm and stay disciplined, we gotta do our research. And finally, number 3, dollar cost average. If I were to buy as much as I could at once, I would have missed out on great prices for JP Morgan and Costco. Nobody can tell if stocks will keep going down or up. The best thing that we can do is to buy periodically as things go down. I do this all the time with my personal portfolio, and I'm really starting to see the fruits of my labor. So those are 3 quick takeaways from today's video. With that being said, thank you guys so much for watching. I really hope you got tons of value from today's upload. Remember, let's get our money up, let's get our health up, and let's be grateful for what we got. I'll catch you guys on the next one. Peace.